what we've seen in the last week in the markets. Obviously, there's been a lot of
Of course.
volatility.
Yes.
Some people are concerned about that. Like high level, and I know this is going to vary depending on who's in the chair across from you and what their financial situation is, maybe how old they are. But like at a high level, like what would you tell a client right now that might be concerned about what this means for their money and what it means for their planning?
That's a great question, Sean. So we have an investment plan for all of our clients. I recommend everyone have a plan out there and stick to the plan regardless of the economic situation that we're in. We like to remind people that the market's going to fall 10 to 15% once every year, year and a half, and every 5 years it's going to be roughly double that. Sometimes more, sometimes less. There's no even cadence to it, so we can't really predict when that's going to happen, but we have to know that's part of the process. For retirees, which we focus on working with retirees and those close to retirement, as well as retirement plans, we work with some business owners as well, but the core base of our clients is those in retirement now. So they are relying on their portfolios to provide income to them. So the most important thing is to make sure you have, at any given point in time, 5 years, and there's a range there. Right now, maybe a little bit less because the market has fallen somewhat. So maybe it's 4 years of income needs. So you want to have cash or very liquid, safe assets that you can pull from to maintain your income during whatever a downturn may be. Because this could be the bottom today, right? Yesterday, but the bottom could be another 20 or 30% decline from here. We don't know. The key is making sure you have enough cash flow to weather the storm and ride through the downturns. It may not be now, it may be in a year or two, but we're going to have them.
Without having to draw on like a 401k or draw out of the market essentially.
So
right?
the 401k is a little tricky because it's hard to pick and choose the assets you sell from. The key thing is making sure that, at the end of the day, we think of the market, we think of, my portfolio, I see the statement in the mail, wow, it's down or it's up, that's great, what's going on? But at the end of the day, it's you own companies, right? So you don't own these, these assets that are floating out there in the ether. You own corporations, right? Those corporations grow in value over time. They produce things. They pay their shareholders, right? They pay you income along the way. So the key thing is when markets are down, that you're not selling the companies you own, that you're selling the cash in the portfolio or the bonds in the portfolio. So if you have a 401k, a lot of people have target date retirement funds. Like, I'm retiring this year, so I have everything in the 2025 retirement fund. Now that's not necessarily what everyone should do, but that's what a lot of people have. So that 2025 retirement fund is built for someone retiring this year in any market conditions. So the key thing is being able to pick and choose. That 2025 retirement fund has a lot of assets in there that are short-term, safe assets that can be sold not at a loss. It's a little bit hard to do in the 401k plan. In an investment portfolio that like we manage for folks, or like many folks manage on their own, you can pick and choose the assets you pull from. So the key is not selling the companies you own, it's selling the cash, converting that to an income stream.
Gotcha. Or would you want to prioritize maybe selling using maybe like bonds?
Yes, yeah,
like that? Okay,
yeah.
gotcha.
So like your safer assets are typically bonds.
Right.
Okay. I have a preference towards like shorter term bonds, especially right now. But yeah, selling those bond assets, yeah, and that's typical. Is like if typically now in 2022 this didn't happen, both bonds and stocks went down, but typically when the price of stocks goes up, the price of bonds go down, and vice versa. So when you see stocks go down, bonds would hopefully go up in value or maintain their value. Mm-hmm. So then you can pick those bonds to sell, and that can provide you income to weather the storm.
This strikes me as a really good example of why it's important to have a financial plan, because with the uncertainty right now, if you were just sort of hoping to retire in the next few months, but maybe you hadn't thought about this quite as granularly, you might be in a position where you would need to kind of delay things. So,
yes.
I mean, I guess how much of a cautionary tale can this be for people that I think are thinking about their financial future?
I think it is a cautionary tale. And just remember, the market may be down 10 to 20%, depending on where we end up. Yesterday, the swing in the market was like 8.5% from the lowest point to the high. It's crazy, right? One of the top 20 days, most volatile days we've ever had. So it's really hard to time. It's hard to know where we're going to end up today at, in fact. But the key thing is making sure you have cash on hand, and the fact that the market is up significantly from where it was. So, only sell what you need to make sure that you have that cash available to make it for the next, say, 4 or 5 years. Does that make sense?
It does.
Okay.
It does.
Yeah.
Any other tips you would have for people, maybe with a longer time horizon,
Yeah.
someone like me who just want to protect their money right now, that want to
Yep.
make sure that they're being smart and they're not losing out on anything?
Yeah, I mean, I think the key is don't chase the trend. So, the trend right now is cryptocurrency, maybe some gold. And I'm not saying anything bad about any of these assets in particular, but don't chase what was hot. Don't chase the technology stocks that were hot last year, because now they're some of the worst ones. So be mindful of that. NFTs, non-fungible tokens, were hot a couple of years ago. I had some younger clients call me in, hey, should I do this? And it's that's the core thing, is just owning those companies, owning those stocks, and sticking with it. And as long as you have enough cash to weather the storm, that's critical. Now, for younger people, it's a little bit different because the portfolios are smaller, and I'm going to be working. So for those folks, I recommend keeping 6 months of cash reserves, which I know is hard for a lot of people, at a minimum 3 months. But once you have 6 months of cash reserves, that should be able to weather through an economic downturn, to find some work, that sort of thing. And then the rest really should be, invested for the long run. And that's what we're trying to proactively invest some folks that maybe had a little more cash than maybe they need to have. Now's the time to say, hey, we're down, so let's go to the market while things are on sale. They may be on a bigger sale next week, but we know in the future they're going to be higher. So for younger folks, it's, if you have cash sitting there, if you got your 6 months of savings, deploy that cash, move it into the market. Again, you're not going to hit the bottom, right? That's
Right.
very hard to do. But just now's the time to start looking at investing again if you've been a little more cautious.
I was going to say, it doesn't seem like a time to be scared. I mean, even though
Right.
the market could, there is a lot of fluctuation. People do get nervous about that, but no matter how you look at it, we've seen where the market can be, and we're
Right.
way below that
Yeah,
right now. So.
exactly. So again, look out 5 years. If you need, whatever it is, a bunch of money to buy a house, or to whatever the case may be, you're having a kid, you got to have some savings saved up, you got to pay for your kid's college, whatever the case may be, that 5 years, don't invest that money. Keep that in cash. That needs to be safe. And then you don't have to be worried about what happens to your portfolio along the way. You know that things will, as long as you're in a diversified portfolio, right? You're owning companies, the great companies of America and maybe throughout the world, you'll make it through just fine because you have that cash cushion. Yeah.
I think it's perfect. Thank
Great.
you so much,
Awesome.
Greg.
Yeah, thanks, Sean.
I really appreciate your time.
Of course, thank you.
Sure. Yeah, we just got a shot of the two of us talking.
Yeah.
Be like a establishing kind of thing.
Sir, yeah.
So how long have you? I would imagine is it your company? Was it your
Yeah,
dad's?
it's my company. Yeah. So I started. It's funny. I have a buddy who ran the Big Bad Show in Raleigh, which was like a public access TV show.
Okay.
And he did a skit about. It was a funny skit when he was in high school about he was an investment banker and he wore Argyle socks, but. And then he just said, well, don't take my advice. I have everything in derivatives, which was a joke. But I started my career on a derivatives trading floor in Charlotte right before the great financial crisis. So worked through that on a trading floor, which was crazy. So joined my father's business here in 2010. So gosh, 15 years from now. And I worked in investment banking before that. I have an econ degree. He started the business in 1976.